So I'm opening google.com and here's what I'm typing into google.com. I'm typing Ola Electric stock price and here's what I see. Ola Electric is currently trading at rupees 75, which is down by 8% today. So I have two questions, and both these questions are to my co-host Rohin. Why do you think Ola is down by 8% today? And what is the significance of this particular number on this day? Any guesses?
Wow. For someone who's absolutely not interested in the stock market, confession, this is real toughie, right? Do I have like a phone a friend or something like that? Because I could ask Jinesh.
Okay, I'll give you a clue. It's down 8% today because there is a 3-month period for institutional investors. They have a lock-in period when they buy Ola Electric stock, and that 3-month lock-in period ended today on November 5th. And so there is a lot of selling that's going on, and that's one of the reasons why the stock price has fallen down. But I think you can help me by answering this question. What's so special about the number 75? Something has happened today with Ola Electric stock price which hasn't happened before.
I'm guessing something to do with its listing price?
Yes, go on. Tell me.
Well, that was a shot in the dark. It fell below its listing price?
That is correct. For the first time in Ola Electric's history, admittedly not a long history in the stock market, its stock price has finally fallen below its IPO listing price. In today's episode of 2x2, we are going to discuss Ola Electric. And I'm going to discuss Ola Electric, and I'm going to start this conversation by talking about 3 specific numbers. Number 1, Ola Electric had a market share of 53% back in April in the two-wheeler electric market in India. In September, that number is down to 27%. Ola Electric, when it listed at rupees 76. In a few short weeks, it zoomed up all the way to 146. Many analysts and many people basically said one of the good things that Ola Electric did when it listed was it found the right price to go public. And now, after weeks and weeks of trending down, Ola Electric is finally down to a point where it's below its listing price. In late September, the CEO of Ola Electric, Bhavesh Agarwal, got into a bit of an online war with a stand-up comedian named Kunal Kamra, which I'm assuming didn't cause the dip, but also didn't help. And today it's finally back down. The third number that I'm going to talk about is Ola Electric's service and the number of complaints that it gets every month. A few months back, the business newspaper Mint reported that Ola Electric was receiving close to 80,000 complaints a month, with wait times sometimes extending to weeks. There are days where Ola Electric on its peak gets 6,000 to 7,000 complaints a day. And for a company that has sold somewhere around 300,000 units this year, you can imagine that 80,000 complaints a month is a fairly significant number. Today's episode is about how Ola Electric had a lead and it blew it. And we're going to discuss the past, present, and future of Ola Electric. And to do this, I have 2 wonderful guests with me. My first guest is Jinesh Gandhi. Jinesh Gandhi is currently the research director at Ambit, where he heads auto and auto components. He's been an analyst for such a long time. And Ambit has authored a wonderful report on Ola Electric, which they published a few weeks back. And I'm going to tell you the title of the report. The title of the report is Speed Excites, but Risks Lurk. In the report, Ambit has a lot of very bold predictions. For instance, they said that they believe that Ola Electric's market share is going to decline to 25% by FY31. And the contrasting thing is that Ambit is the only brokerage that has taken a fairly interesting position with respect to Ola Electric. It's a contrast with other brokerages like, say, Goldman Sachs and HSBC, which is constantly going and being much more optimistic about Ola's chances in the future. And so, welcome, Jinesh. And could you just tell us a little bit about this report that you authored? Why did you author and believe that Ola Electric is in this position? And has any of this changed with the recent developments over the last few weeks?
Yeah, hi. Thanks, Praveen, for having me on the show. So, the underlying reason to author this report was that Ola is the first pure electric vehicle OEM to get listed in the Indian markets. And to be fair, they, uh, despite being relatively late entrant as compared to some of their other peers, they were very fast in terms of ramping up their market share. And in that context, there was good enough interest to understand how this company would do in a fast evolving industry. Everything said and done, we are still quite nascent from electrification perspective, and we do believe competitive scenario is yet to evolve fully. And in that context, we have tried to cover in our report all the major areas which will determine uh, the winners and losers in this industry, particularly from Ola's perspective. And so, in that context, we have covered Ola's strength in the business, which is of deeper integration and wider coverage of the two-wheeler value chain. We have covered their foray into cell manufacturing, being the only two-wheeler player to get into cell manufacturing among 3, 4 players in India who are looking at cell manufacturing, which is a double-edged sword in our opinion. And then we have looked at the plans of other OEMs with respect to what they're planning to do on the electric two-wheeler side. And all these things we have tried to put in perspective with respect to at then valuations when we initiated coverage at close to about when stock was close to about 115, 120 rupees, how what is factored in the price, what is not factored in the price, and hence we had initiated coverage with a sell rating because we saw most of the positives were in the price, but risks were not.
Okay, Jinesh, I'm going to just ask you straight away. This report was authored by you maybe a few weeks back. Has your evaluation of Ola Electric changed over the events of the last few weeks?
So, to be honest, we were wrong in anticipating market share to decline to 25% by 531. They are
Yeah, it
already
happened
down
in
to 20.
5 weeks and not in 5 years. But okay, go on,
Right.
please.
Yeah, but we do believe that market shares will be volatile given that this segment is evolving at a very fast pace. There will be transitory advantages and disadvantages to companies because product life cycles will play its own part. Competitive entry and exit of players will play its own part. Uh, Given the advantages which Ola has, which neither of those have changed, uh, some of the issues which have cropped up probably could have been managed in a better way. And it's typical of a new company where you grow fast, you come across new hurdles, you address them. Another set of problems comes in, and you address them. That's something which will probably Ola will learn from its past experiences and change their approach of business. Will improve upon product quality, service network, and it's question of timing, in my opinion, rather than anything else. So our assessment probably hasn't changed yet. We will take a fresh look at it as we go further into the future. They will be launching their first electric motorcycle in the fourth quarter of FY25, which we believe addresses much bigger market than scooters. So we are hopeful of market share improving and then again reducing as more players come into motorcycles. So we'll keep a very close eye on that.
Got it. I mean, I see, Jinesh, that you're still being very circumspect and saying that, well, yeah, these kind of problems happen on the service side, and I'm sure Ola will figure it out. Now, I'm going to get my second guest, who basically is going to tell us a little bit about this aspect. My second guest is Narayan Sundaraman. So, Narayan Sundaraman is an accomplished leader. He's had 28 years of experience in marketing strategy. He used to be at Cadbury for 15 years, ITC for 5 years, Star TV for 2 years, and used to be the chief marketing officer at Bajaj Auto. So, Narayan, as the CMO of Bajaj Auto, I must also say to our listeners that Bajaj Auto is one of the companies that is actually gaining significantly over the last few months. In September, Bajaj's market share in the two-wheeler electric segment rose to 21.4%. This is in contrast to Ola Electric, which is at 27.5%. So, Narayan, do you agree with Jinesh that all of these problems that Ola is facing, yes, I understand they're a market leader, they're going to face some problems with service, etc. Do you think these challenges are transitory, or do you believe that they're going to actually have some long-term effect? Like, put very simply, if you were the head of, put your CMO hat on, and you're sitting there and you're seeing all of these service challenges, on a scale of 1 to 10, how much of a crisis would be there in your offices at this time?
Yeah, so two things. First of all, I just want to specify that I'm the ex-CMO at Bajaj. I don't work at Bajaj. So that's actually a good thing because I can say things about the company without, sort of worrying about saying something, that may be very confidential or something like that. Full disclosure, I don't know anything about the company because I left them sometime in mid 2023. But I have seen this market grow from zero to where it is upfront and close. In fact, the Bajaj Chetak electric vehicle was I think, one of the first electric two-wheelers to be launched back in October 2019, which was, I think, much before Ola made it to market. And one of the observations in the automobile industry, especially when there's a new technology and when there is something new that comes in, is that there are a lot of people who come in. There's a rush for first mover advantage and pole position. And, it's one of those regrets one has, say that, Chetak was the first, but then everything evaporated because, as Jinesh has rightly pointed out in his report, one of the things that Ola did a damn good job of was to ramp up really, really quickly, right? And Bajaj wasn't able to for a host of reasons. All we needn't get into those at this point in time because what has happened has happened. But I think somewhere, and there's a wonderful chart in his report which shows the scale up much ahead of what the others did. It's like quite stark, it's a very steep sort of volume curve, whereas everybody else is quite sort of narrow and shallow. So yeah, kudos to them. They got product to market, and getting product to market in in a new space is very, very important. But I do think that there are a number of risks, and I think Jinesh's report is puts it quite mildly. I think the risks are, you have these American thriller movies in which the president is in a bunker and somebody's going to attack and it goes to DEFCON. Right now, to answer your question, if I was the CMO at Ola, I would be at DEFCON 5.
Nice. So, DEFCON 5 is, of course, the highest level of crisis. How do you tell? Like, in many ways, you can look at a company and its ambitions and its plans, etc., and use that as a way to determine whether this company really intends to do these things. How does it intend, and what the new future market would look like? How can you look at all of this and try to make sense from a forward-looking perspective?
So maybe I'll go first over here. So I think it's very difficult in that context because there's so much happening. One thing which you forgot is their foray also into the primarily manufacturing of modular dark stores, which they had announced.
Yeah.
Sorry,
Yes.
what?
So,
Modular
so
dark stores.
Yeah.
I
So-
missed this. This is as in
Clearly,
dark
I missed this too in my
yeah,
research,
is
but
it
please go on,
modular dark
continue.
stores, as in the dark stores that service
Yeah.
quick commerce, etc.
Yeah, I think what he said is, and it's got to do. Sometimes I feel he's been reading the Ken and the articles on the growth of quick commerce. So I think he decided to get into the act. There was something about that we'll do modular dark stores and get into the supply side of dark stores, if I'm not mistaken.
Yeah.
I mean, I'll just interrupt and say that is not terribly unusual for Ola, the company. When I'm not talking about Ola Electric, I'm talking about Ola, the company, and Bhavesh Agarwal. It's not unusual for them to just, I mean, I hesitate to use the word opportunistically, but they basically look at things that are happening and then say, oh, we're going to do this as well. There was a time when Ola was doing food delivery. There was a time when they were doing second-hand car sales. So they do a bunch of things, that whatever happens, and just jump into it. So that usually happens all the time.
But the era for that passed, right? There used to
Yes.
be, that was the ZERP era,
Yeah.
where you could talk up the valuation of the company by talking about a sector that you're entering
Correct.
and the potential TAM.
Correct.
And then it would essentially rewrite your valuation.
Yes, but-
now you're in the public markets era.
No, but I'm saying that has anything changed in the public market era, which is why I'm trying to get Jinesh in, because imagine if it's Ola Electric and you're saying, oh, we're going to go into the three-wheeler market, we're going to go into this, we're going to go into that, and people
So
like
by the way,
him-
it's not just public markets, private markets. Today you said you opened the episode by saying Ola Electric's public market price,
Yes.
stock price fell below its issue price. And just today there was this report that Vanguard wrote down the valuation of its investment. Vanguard is one of the largest funds in the world, which wrote down the value of its investment in Ola down to $2 billion.
Right.
So Ola's private market valuation has also fallen significantly.
Yeah.
And then, of course, there is a public market valuation of Ola Electric as well.
Yeah. So, Jinesh, we know these are all the, as Rohan has sort of said, these are all the quote unquote things that companies do in order to drive up valuation on the private market side. How do you look at this on the public market side? Like, how do you look at it and how do you determine what's really going on here? I know you said it's difficult, but please continue.
So clearly, it is not easy given that when you have an ambitious promoter, uh, it's great to have such promoters. Once you have a steady cash flows from a cash cow business, you have ability to reinvest into future areas. It's great to have that kind of ambitious promoter, but when you have a startup which is some time away from having a free cash flow generation, you need to first have a watertight focus on getting basics right, getting your core business to a scale, and then look at other things. Uh, Three wheelers is clearly a natural extension. I don't think so. That's materially different. That's fine. Passenger car was, again, I think, ambition, but good. They've shelved that. It's a very different business. You're competing with people who have very capabilities are very different altogether. So it becomes difficult to budget for what will be done, what won't be done. And hence you go by the committed capex, which is a relatively easier way to look at these. Markets do get excited by, at times excited, at times scared by such diversifications. So that is something, and hence the stock price usually is not barometer of what business is doing. That way, yeah.
Interesting. I want to spend the last part of this podcast talking about like the way forward for Ola Electric. I'm going to keep this now squarely on Ola Electric right now and less about, well, of course, the two-wheeler market also has a part to play in this, but we know where Ola Electric stands today. What do we expect will happen over the next, say, 12 months? And
Can I widen that question for you? Because and from Jinesh's report also, it's clear. I mean, or at least it's not clear what leads to a sustainable and lasting competitive advantage in this space right now. Because the player who was number one 3 years ago is now in the doldrums. The player who was number one last year is rapidly losing market share. New players are coming up, like, so everyone, I was speaking to someone yesterday who said that, look, everyone is waiting for bated breath with what happens when Honda comes out with its EV, right? That's the next. So it looks like there are bombs waiting to drop on this sector every year, right? And there are these ups and downs, right? So, I mean, yes, I do want to understand Ola Electric's chances as well. But a larger question that I would want to understand is that what would create a lasting advantage here? Like if we were to take, let's say, a next 3 to 5 year, not too long, let's say even a 5-year time frame, what would be the strategies that would create a lasting and competitive advantage for Ola Electric and possibly others as well?
I think that's a great question. We should start there.
Yeah, so let me maybe give you my views. I think lasting advantage over the next 3 to 5 years, what I would look for is first is product portfolio. This is a fast evolving market. And you call them use cases or you call them functionality, whatever it is, there are more to be explored. There are different kind of customers who will be. One thing is clear, that I think all people who are in the need for buying vehicles are thinking about going electric, right? And the large sort of belly of the market, which is that everybody is eyeing, is the commuter customer, be they be riding scooters or 100 125cc motorcycles. That commuter profile customer is the big fish in this. Now, there are various use cases that exist, so therefore, a product portfolio that covers a lot of it, be it like different kinds of range, different catering to different audiences. So, for example, one of the advantages of a scooter is that everybody in the family can drive one, whereas a motorcycle is solely for men. So that finds a certain resonance in some parts of the country more than others, depending on the extent of female participation in the workforce, for example, or education levels. So I think there are many things to be explored. So I would look for a product portfolio, which means R&D capability, which means what's in the pipeline. And I would love it if CEOs of automotive
What's in
companies,
the real pipeline
what's in the
and
real
not just
pipeline? I
in the
mean,
talked about pipeline?
With
correct.
committed capex. Okay,
Yeah,
sorry,
so
continue.
what does that look like? And I think while eyeing motorcycle is one thing, but what else is there in the scooter pipeline? And I would look for that for sure. A product portfolio that covers different kinds of customers is, I think, one very very important thing. Second thing is network, and by network I mean sales and service network. The commuter belly of the market is looking for assurance that when, not if, when his or her product breaks down on a hot summer day on the main road of one small town, he or she knows that there is help at hand, which is half a day away. Forget about, I mean, one is not saying you need it in 10 minutes time, half a day away, and the vehicle will be returned within you know 24 hours, 48 hours, or whatever. And so that assurance and that network is going to make the huge difference. And therefore I do believe that when Honda enters, and is really going to be another sort of inflection point, because they will come with their customer base, they will come with their network, and they will come with R&D and portfolio.
And of course, after sales service.
Yeah, and when I say network, I include not just sale
Fair,
point,
fair.
but also after sales
Understood.
network.
Understood.
Yeah. So
Jinesh?
just to add to what Narayan said, those are definitely hygiene factors for sure. I mean, one when one buys a automotive product, four-wheelers, two-wheelers, basic expectation is that you have access to reliable service network. All those things definitely are important, and I'm presuming those things will fall in place sooner rather than later. Uh, from structural standpoint and from 3 to 5 years perspective, I think what is critical to get right is one is product portfolio, as Narayan mentioned, wide range of products, scooters, motorcycles, within motorcycles, commuters, premium, having a wider bouquet to offer to customers, having addressable market which is much larger than what it is today. Today we are serving just about one third of the two-wheeler industry, which is scooters. Secondly, is with respect to flawless execution, both on product quality and on ground network on the sales and service side.
Jinesh, I'm going to ask you to expand a little bit on that, because I remember these very, very wonderful words from the report that you had written, which basically says, and I quote, narratives are in the price, risks are not. This is exactly what you mean.
Yeah.
You're basically saying that there are risks here.
Yeah, so risks are company specific, risks are market specific. So, market specific risk is we are assuming some of these incentives, be it lower GST, be it state level incentives, will continue. Very recently, from 1st of September, for example, Delhi state has withdrew exemption of road tax for electric vehicles, which is 10% of the vehicle cost. Volumes tanked. So that affordability of EVs, which is supported by differential GST, which is 23% differential, 10% on road tax, incentives, all those things, which aids faster penetration of electric vehicle. If that penetration of electric vehicle is lower than what one is expecting, that itself is the biggest risk for a company like Ola, which is just dependent on EVs. I'll give you a point in case. Last 2 years till March, April 24, EV penetration was plateauing out at about 4.5 to 5% range. It's just that in last 4 months we have seen pick up to close to 7%. Company expects it to be 30% in 3 years' time. We expect it to be 29-30% by FY29. The speed of electrification obviously is the biggest risk for EV-only players. In turn, they have invested ahead of volumes, and if volumes don't come, their sustenance could be at risk. The second risk is with respect to the company-specific factors, which we talked about, getting over-aggressive in terms of timing of product launches, in terms of sales network expanding faster than your service network. Usually you want to have 1:1 ratio of sales to service. That is something which needs to be taken care of. And third is with respect to when they move to their own cell manufacturing, for example. Ola, by the way, Ola is the only company today which offers 8-year warranty on the battery. And when you move on to your own battery cell manufacturing, it's an advantage, but also a disadvantage if there are product quality issues with the cells and the battery itself.
Also, you're saying that the risk is only going to manifest itself over the years.
Exactly.
Because you've given out the cost of service, and the cost of servicing that warranty will play out as you start hitting year 4, year 5, year 6 of 7 and 8 of this. All right.
Yeah, so technically, if you get the chemistry right, 8 years is a realistic life of a battery. Globally, on the passenger vehicle side, people do offer such kind of warranties, if not longer. And this obviously in turn shows the confidence of Ola in their product quality, which will come in the market from April 25. So from lab to commercial is something which we need to see how it plays out for cell manufacturing.
The views expressed in this podcast are solely those of the Analyst and do not necessarily reflect the opinion of Ambit Capital Private Limited. The Analyst does not hold any financial interest in the securities discussed in the podcast, nor do their relatives. The podcast is for informational purposes only and should not be construed as financial advice. It is essential to conduct your own research before making any investment decisions.
Thank you for tuning into 2x2. If you've made it this far, what you've just listened to is a highlights-only version of an hour-and-a-half discussion. There's a lot more that we ended up talking about, which was also interesting but didn't make it to the cut. Things that we spoke about were...
But what really is the advantage that being an early mover and selling or gaining an early market share gives in this kind of a space? Can one now assume that it's the same brand can essentially make a 2-wheeler and a 3-wheeler and a 4-wheeler?
The final risk of Ola Electric that we have not spoken about, and that is its CEO, Bhavesh Agarwal. So if you want to listen to that, you can consider becoming a premium subscriber to the channel. If you're not ready to be a subscriber yet, you can subscribe just to 2x2 if you are on Apple Podcasts. If you're not sure, that's fine. Take all the time you need. We'll be unlocking this episode in future sometime for a limited time just outside the paywall. Since we're on the topic of unlocking premium episodes, last Monday, we unlocked an episode that we had done almost a month ago. It was on Ather Energy and is really one of my favorite episodes because we got the co-founder and CEO of Ather Energy, Tarun, along with Professor Rishikesha Krishnan, who's the director at IIM Bangalore. I promise you, it's just a coincidence that in the same week, we've got 2 episodes of 2 companies, very different companies in the 2-wheeler EV space. So if you want to listen to an episode, I suggest you add that to the list. You might want to listen to it soon because we have unlocked it for a limited time and it can go back behind the paywall anytime. This episode of 2x2 was produced by Hari Krishna. Sound engineering and mixing for this episode is done by a resident sound engineer, Rajiv CN. Thank you once again for listening to 2x2. If you like this episode, be sure to share it, and we'll be back next week with something new once again.